Well, health care and tax reform delays are sparking some fears about the economy stalling. Charlie Gasparino is FBN's senior correspondent for everything. Nan Hayworth, former Republican Congresswoman from New York, and Dan Shaffer of Shaffer Asset Management. Charlie, first of all, what do you make of the jobs now? It is looking in the rearview mirror. I understand that, but that doesn't show signs of a slowdown yet.
Yeah, I mean, I think it's a good one. And here's the thing. You can't sort of say this is complete affirmation of Donald Trump and his economic plans. But generally, but look at it this way. We're in the 8th year, or going on the 8th year of an economic expansion. Things should
Albeit starting from ground zero at the recession.
Right, but things should be slowing by historical standards. And they're not slowing. And you have to, if you talk to business executives, and the liberals on Twitter will go nuts when I say this because they were already going nuts when I tweet it.
But you love it when that happens.
I love it. Here's the bottom line, that when you talk to business executives, they say, okay, even if we don't get tax cuts, at least we have an administration that's not imposing regulations, that's not trying to kill us every day. Thus, we see our bottom line getting better. You combine that little bit of optimism with better corporate or decent corporate earnings. You know, it's a less negative, even if you don't get tax cuts, it's a less negative scenario for the stock market.
So, Dan, at least we don't have somebody like Hillary Clinton or Barack Obama to be adding a new regulation every day. But you do see a slowdown coming, don't you?
Absolutely. I see a deflationary depression coming. I think that the stock market's way ahead of itself. If you look at the cost of shipping goods overseas, that index is way down, it's not even jumped. You look at the cost of raw materials, I mean, finally we're getting the grains to move. But you look at the soft commodities, you look at the raw materials,
Is there nothing we can do to turn that around?
No, this is a natural cycle. In fact, I've been waiting about 18 months to get to July because that's the target of a major turn in the equity markets. And the bond market is signaling to us that some of these commodities may have bottomed and that inflation may be coming, and the stock market hates inflation. If they get a whiff of that, then they'll start taking stocks down.
How is the bond market signaling inflation? Bond prices are going up.
Bond prices are dropping in the last 3 weeks. The yield on the 10 years now over 2.4.
Yeah, okay, let's not get too into weeds, Dan, because what I want to focus on is what happens if we do get tax cuts. I mean, is it possible, assuming for a moment that Dan is right and all these negative indicators indicate some kind of slowdown, if we get a big tax cut, won't that turn things around?
Absolutely. I think we've got basically the equivalent of two tectonic plates of the economy, if you will. There's obviously a pent-up desire for growth. That's what Americans were built to do. Right. Do things better, do things more, do things in a modern way and grow the economy. But by the same token, Dan is reflecting basically the fact that we have had 8 years of terrible policy that have put Americans out of jobs, that have deprived Americans of income, of savings. So we have got to have an event that breaks that tectonic lock. And I think tax reform could do it.
We have kind of a hangover of that even Republicans have taken on. That is, of government, the idea that government can solve all problems. And one of those things is a minimum wage. You even have Republicans that are pushing minimum wage. But we should mention in this jobs number, between 20 and 24 years old, we saw a loss of 185,000 jobs. That's the people, these are the people that are hurt most when a minimum wage goes up and the employers say, hey, I got to fire somebody.
Absolutely. I mean, there's some negatives here. But let's be real. I want to go back to what Dan said. We had a tremendous rally in bonds over the last sort of 3 or 4 months. A tremendous rally where the yield on the 10-year started getting close to 2%, correct?
Absolutely.
Okay, so that's
it had been lower before.
It had been lower. So that's a tremendous rally in bonds. The last 3 weeks, you've seen...
Which means for you what?
It means bond prices go up, yields go down, which means that people are worried about not necessarily inflation, but they're worried about a stock market crash or the markets being overbought.
I sense that you're kind of in between Dan and Dan, that if we get tax cuts, maybe we can avoid it.
I don't think that the bond market is signaling deflation right now as it sells off.
No, it's signaling it's inflation. Now, let me explain. Let's go back to the GOP agenda for a second. If they cut taxes with the amount of debt that the United States has, that's going to slow down the economy. If they cut taxes, it's not going to...
Wait a minute, Dan, that's happened. Hold on a second. In the 1980s, something very different happened when we cut taxes. We had a tremendous increase in growth.
But we didn't have the deficits that we have today. You cut taxes, you have less money to pay down the United States debt. The government then spends less. Isn't part of Trump's agenda to less government? If the less government is a part of GDP factor, if the government slows down spending, That's also slows
Dan,
down
You know,
money.
but Dan,
the bond
Dan,
market's selling off right now.
where in the-
is people believing that the Trump tax cuts
Right,
could
absolutely.
come.
They're discounting for that.
And
basically.
that's why that's why
Dan,
bonds
go
are selling
ahead.
off.
I disagree with
Dan,
that.
I asked this
Yeah.
question of Tim Geithner when he was Secretary of the Treasury and I was on the House Financial Services Committee. We have 50 states across the country that are all laboratories for economic growth or not.
Right.
And I asked him to name one state with high taxes and heavy regulations that was doing better than states that had lower taxes and less regulation. And he could not come up with a
Dan,
state.
when we have
High taxes
tremendous growth
always
that comes
suppress the economy.
from more economic activity because of lower tax rates, we very often fix a lot of the problems that come with high deficits.
Absolutely,
Yeah.
but lowering taxes lowers the money that the government has to spend. Am I
Not
correct?
necessarily.
No.
If there's
Well,
more economic activity, the government
you
gets
get-
more revenue.
Our
It's happened
laboratories
practically every
help
time.
with
Look at Illinois, look at Connecticut. I live in Connecticut. Their budget is way out of whack.
They're high tax
Yes,
states.
because
Yeah.
they keep taxing away.
Right, but the low tax now, remember, we've never
if you
had
believe
this
it.
size deficit in history to
there's
reflect
no
lower
way-
tax
Dan,
rates
let's be
helping the
Let's
economy.
be real
The
clear.
only way-
You cannot pay down the debt in any way unless you get economic growth
Right,
approaching
right.
3%.
Right.
Now, if you ask me, how do you get 3% growth? Well, some liberals would say, let's go out and build a lot of infrastructure and go into debt that way. I would say tax cuts are the most efficient because you do incur deficits at
And
first, but
Nan,
they pay off in
you
the
make
end.
a great point, which is that the states are little petri dishes.
Absolutely.
And very often
Never
you look
works.
at people vote with their feet, by the
Right.
way. They are leaving Connecticut. They're
Right.
leaving Illinois. They're leaving. I think
these
Illinois had the
economies are
largest
collapsing.
number of people leaving the state.
Right.
And where are they going? They're going to Florida.
They're
Florida
going to
gets
Texas,
300,000 new
South
residents a
Carolina.
year.
Absolutely, because it is a fallacy. It is a dreadful fallacy, and I know it firsthand, to think that somehow government is as efficient as enterprise. It is not in
We're
anything
going to
it
leave it at
administers.
that.